For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. So we're looking at the Japanese yen, traders, and one of the key things with any of these is not to just blindly assume that everything is going to be, 3 levels of rise and a reversal. You need to be able to or 3 levels of drop and a reversal. You need to be able to distinguish a market that's in a template, an up template, down template, or in a trend. We talk about the 3 things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they fail. Or they stay in a trading range. So obviously a market that continues to break out and then fails and reverses will be in a template of sorts, as opposed to a market that's breaking out, pulling back, and continuing to move in that direction. Now, we talked about this with the Japanese yen. If we go to the hourly chart, we can see the beginning of the month. We had our day 0 situation. We had a peak formation high, peak formation low, the pullback inside, and then the consolidation. So if you're not sure what that is, again, go back and study your charts. Go look at the old videos. I talk about the timing of a new month, creating a rectangle, peak formation low 1 week, the end of the week, beginning of the next peak formation high. They pull it back inside. So what you need to understand about this is that the timing of the new month is when we may see a market pull back and continue a trend in one unique direction, or consolidate and reverse, trapping traders on the longer time frames, again, in a trend. But the timing of the new month is when we may see that market reverse. So when we have that possibility, again, we need to understand the difference, and we're looking at the templates in order to identify the best session trades as well as the bigger 3-day setups. So that being the case, we have a peak formation on the Thursday, the previous week, peak formation low, evidenced by the move down and the reversal, green closing as a green day, and then the creeping trend up heading into Monday, so day 2. So again, day 1, day 2, day 1 being our first green day, and then the reversal day 2 taking out the high. So there's our day 1, day 2. So again, just to repeat, day 1, day 2, day 3. This could be 4 or 5 days. So we're looking for the continuation, day 1, day 2 breaks, day 3 breaks for the sell high setup possibly. And again, the same thing applies in the long direction. I'm just using this. We could have day 1, day 2, day 3, and then the move back up for the longs. Point being is when you get a day 1, even a day 2, and the market comes back inside on day 3, that means I'm looking for the buy low back up either in day 3 or possibly day 3, day 4. So there's still our 3 days of rise. Day 1, day 2, they pull it back inside day 3. Okay? And then day 4 continues, and that's our 3rd day to the high. Right? Day 3 longs. Day 3 longs. Because on day 3, we're an inside day or a creeping trend, or maybe they're going to come down and it's a buy low on day 3 back to the high of the day. So if they don't take out the high, right, we want to know that we're either getting in a buy low. If it's set up in the session, I'm not saying that you just buy the low, because it could be a continuation. So what it needs to be is a buy low in the session itself, right? Break in structure, there's our W. Simple as that. And again, that comes back to our timing window. And if you're not sure what the timings are, go look in the videos. There's a few hundred videos about timing and levels. So understanding that not everything's going to be textbook. We can see trends, but that'll come back to timing. So if you're looking to sell the high on day 2 and you're in between the London and the US session, you may be selling a pullback in a trend trade. They could come back in the US and continue the move. So it's important to be able to differentiate between a trend versus a day 1, day 2, day 3, where we're going to get that reversal opportunity. And you've heard me say this again and again and again. Each day, day 2, for example, has a higher probability of having a successful reversal trade, even if it's going to continue to trend. Okay, so you might have a sell high in London for 50 pips. You might have a sell high in the US at the high of the day for 25 to 50 pips, and they may continue it later in the day towards the close of the US session back to the high. And then again, day 3, we might have our larger move that is the initial break in structure, so that day 3 can still be a break in structure day. Day 4, so we get a move down, breaks structure, day 4 comes back up. Friday, day 5 may break down before continuing down. So again, emphasizing that you're not trying to read every move in an instrument. You're trying to identify best trade setups. And unless you understand the templates and whether you're in a trend or an up template or a down template, it will give you a clear understanding of whether or not you're getting best trade setups. So again, we have our little M structure heading into the US 12 candle window on day 1. In a move down into the low of the day and a reversal in that US equity market open, back up for 50 pips, and then the pullback and continuation in the Asian session. Day 1, day 2, we're down low. So if we're looking for a day 1, day 2, day 3 on a down template for the reversal, well, obviously we're not in that scenario. We have a market that's pulled back inside. Remember what I just said in the previous video. We break out at the low of a week outside of a previous day's level. We can bring this across to Friday, and it pulls back and retests. That's the classic setup for reversal, whether it's on top or below, into the next session. So again, we have our trend trade on day 2. Day 2 trend traders. So you've heard me say this again, I'll repeat. Day 2 trend day on the inside. It didn't break the high of the day. We're inside after a breakout and pullback for the reversal trend trade on day 2 back to the high of Friday, which was our initial day 1. That was the high. Monday went lower. Day 1, day 2. Day 3 pulls back inside and squeezes for a 7,500 pip move through the high of Friday, high of the week, high of Monday, high of the day. Again, a day 2 trend trade. Traders who counter trended that in the reversal in the US session got 25, but that's an indication, again, of a strong breakout trade now. Breakout trade. Breakout, pullback. 3 things that markets do: breakout, pullback, and continue the trend. Day 1, day 2, day 3. Day 2 trend day, pull back to the breakout level, continue the trend. So we're talking about the trade setups in the 12 candle window. So if you're trading in these other times and you're getting caught and you said, so Stacey said it was a reversal day 3. No, I'm talking about the setups in the 12 candle windows based on the template you're trading. So for people who maybe like to short, they wouldn't be looking at this pair. If they are, they're going to get caught counter trending or trying to reversal trade a trending market. Day 1, day 2, day 3, making new highs. Again, breakout, pullback, continuation. Day 4, Thursday, breakout, pullback, continuation trade in the US session. We continue to great question from a trader. Why don't I trade diagonals? Because that's not part of how I trade. I will look at diagonals for trend line break retests. If you study Al Brooks at all, you've heard him say this. Micro trend line break retest of the high or of the low. So what that means is when they break the trend line, that's a break in structure. I will look for a retest back to the high, which aligns with a strong trend. So similar to the Canadian dollar, we have a market that's gone 3 days of rise, day 1, day 2, day 3, continuing to make new highs and closing higher. Day 4 on the Friday, same thing. We have taken out the high of the week in Asia this morning. We have volume trapped above 75. If this was going to give us any sort of reversal trade on day 1, I need to see a break in structure, a pullback, retest double zeros maybe for a move back down into the breakout traders from last Thursday and Friday. So not to say this is a trade recommendation or a reversal setup, currently in a strongly trending bull market, but if I see a break in structure from these higher level longs, we have a box between 25 and 75, a pullback from 75 to 0 in that range, in that upper level of that 100 pip box, it's possible we could see a move back down. Now, not to say this market cannot continue to trend strongly, but that's what I would need to see for a session trade. Day 1, high of the day, back up inside into the high, peak formation high locked in, or we will see a continuation or a consolidated market at the high. So again, the templates will help us identify session trades, whether they're trend trade, reversal trade opportunities, or if we're merely caught in a trading range. We'll see you in the next video, traders.